Good afternoon, traders. Welcome to the More Analytics Afternoon Energy Podcast for February 2nd, going into the 3rd. Going to start off with natural gas. Okay, a large move lower today, left a minor gap above, leaving a minor bearish reversal above. Okay, warned on January 21st that the trade above 348.10 warned a much higher trade. We saw 944 ticks of that from the, but that is on hold. We fell back down through this formation up above here. Obviously, there was a gap, so it was hard to short below it. It was impossible to short below it, but basically the failure back below that 427.60 level there turned this bearish. And then we also broke back below this formation, which was impossible to short below because of the gap. We also broke below this formation, which was bearish, and then we continued to come off. However, I did say to get short below this formation right in here, which was at 348.30, and we've come off down to 315.50. We trade back above the 327 to the 328 to 327 general area. We may see some strength come in overnight. So we are now in a bearish correction against this move up. The only final exhaustion down here would be at 297.30, but it's way too early for that to hold more than temporarily. Right, the crude oil left a minor bearish reversal above on the day. The day itself, by the way, warns of short covering. Just even though we left a bearish reversal above, the day itself warns of short covering, possibly up into the gap before if resuming lower trade. Maintain gap higher tomorrow would leave a minor bullish reversal below, and that'll be more effective if we take out 64.18 in the process. Okay, in the crude, we held exhaustion with the 54.89 low. We rallied $11.59. A number of other bullish calls in here. Those are all on hold. We held exhaustion at 66.49 to 66.60 with a 66.48 high and rolled over $5.09 coming into today. And we also broke back below the 62.66 line, which warns of pressure. That was this line right here. We've seen some of that pressure in here. Further break below this line right here, which is going to come in at 61.23, minus 0.3 of a tick per hour, starting at 6 o'clock p.m. Eastern Standard Time. That'll warn of continued pressure, and a further decent break below this line right here, which is going to come in at 60.55, plus 0.8 of a tick per hour, starting at 6 o'clock p.m. That'll warn of decent pressure. Prefer to see a bit of a bounce off that first before breaking below it to give it a added quality for the short. We break below that decently and back up through it decently, look for decent short covering to come in. We break back above this line decently, that'll warn of decent strength as well. That's going to come in at 62.85 plus 1 per hour, starting at 6 o'clock p.m. Eastern Standard Time. Decent penetration in there is going to be 69 ticks overnight and 62 ticks after the open tomorrow. By the way, I'm just going to jump to the cracks here real quick. So the heat crack's leading the downside. The RBOB crack is bearish as well. But the RBOB to heat crack, RBOB to heat turned bullish So the heat crack, so the heat basically is the one leading the downside here. The RBOB in the middle and the crude, the strongest of the three relative to one another. In the RBOB left a minor bearish reversal above on the day. Maintain gap higher in there. We'll leave a minor bullish reversal below. That'll be more effective if we take out 191.37 in the process. I'm not going over any of the higher time frame stuff in any of these today. The trade back above 186.57. Excuse me. Brought in 9.38 cents before failing back below where it came in at 190.19, so which now warrants a decent pressure. It's failing back below these lines. You saw that pressure in here. Then we failed below this line as well. So the trade below 187.20 minus 0.6 of a tick per hour. Warns of pressure. And then decent trade below this formation right here. I don't want a decent pressure. That's going to come in at 184.80 plus 2 per hour starting at 6 o'clock p.m. Remember that the RBOB should be the second weakest out of the three. And this is in a bearish correction against the move up from 169.78. But it's too early for this bearish correction to hold at this point. Okay, the heating oil left a minor bearish reversal above as well. Maintain gap higher in there. We'll leave a minor bullish reversal below. Okay, the heat. I warned of a minor bullish reversal below on January 16th. We rallied 33.79 cents from the 223.10 open. That was this down here. No, that was the upper one. Oh, I'm sorry. That was. I rolled these in the March, updated with the Feb highs. Oh, that was the Feb. I'm sorry. That started in the February. That's why. Anyway, the break back below 250.88 plus 8 ticks per hour had brought in 12.27 cents coming into today. That was the break back below here. And then I warned that a further break below this line would be bearish, and a further break below this line would be bearish. There's a break below 272.98 plus 9 per hour. And then 239.68 plus 8 per hour. And by the way, the break below 239.68 could project this downward 18 to 19 cents. If we break back above that line, I'd be out of all shorts and long, looking for this to possibly make a run for the highs again. That's going to come in at 240.47 plus 8 per hour starting at 6 o'clock p.m. And the line above that's going to come in at 244.65 plus 9 per hour starting at 6 o'clock p.m. So if we broke back above this line, it'd be long above there. Broke back above this line, it'd be long above there. Move your stops up underneath that one. And if we took this line out also on the upside, it'd be long above that. That's going to come in at 252.70 plus 8 per hour starting at 6 o'clock p.m. Decent penetration, and there's going to be 266 ticks overnight, and then after the open, it's going to be 238. Okay, the Brent left a minor bearish reversal above on the day as well. Trade above 59.69, brought in $10.89 of strength. Had a number of other bullish calls in here. The trade above 65.32 projected this upward 80 ticks minimum, $7.70 maximum. We attained 5.26 of that, but that is now on hold. That was from this break right here. but that's on hold. We haven't violated it yet. If we take out where that comes in at 65, 16 minus 0.1 of a tick per hour starting at 8 o'clock p.m. Eastern Standard Time, that'll warrant decent pressure, possibly for days. Decent penetration. There's going to be 66 ticks overnight. Maintain gap higher. We'll leave a minor bullish reversal below, and that'll be more effective once we take out, if we take out 68.29 in the process. We are likely in a bearish correction right now against this move up from 58.45. It's way too early for these exhaustion levels to hold more than temporarily. So we could see some choppiness and some swings in here as we develop the bearish correction against this move up. We'll have to see. And likewise in the crude and the RBOB and the heating oil. Gas oil left a minor bearish reversal above. Okay. The trade below 690.28. I'm not going to go over all the bullish calls in here. You can read on those, but the trade back below 690.28, it's 8 per hour. Going to pressure. Then we broke below the lower line right here. 681.95 plus 18 per hour. Starting to see some of that pressure. If we were to break back above that line decently, that's going to warrant a decent strength. That's going to come in at 683.77 plus 18 per hour starting at 8 o'clock p.m. Decent trade above there will warrant decent strength. A decent trade above the upper line will warrant a decent strength again also. That's going to come in at 691.66 plus 8 per hour starting at 8 o'clock p.m. Like I said, the cadence is the heating oil is the weakest of the three, the RBOB in the middle, and the crude the strongest of the three relative to one another. Okay, thank you for watching. Hope you have a good evening, and I'll see you on tomorrow's podcast.